Hey guys, Mike here. So, oh boy, what a day in the market! And not only did the S&P break and close above one key level, but really two in my eyes. And then IWM also closed above a key level as well. And so we're going to go into that. And one of our members actually called out early this morning in the Discord. This is going to be a grind higher. So congratulations. He was right on the money. Also, bad news for the economy is still good news for the stock market. That was what this move today was all about. We'll get into that. Also, I want to talk about or get your opinion on a video one of you guys sent me, which I thought was very interesting, especially for the ramifications it has going forward, not just for the U.S., but for the whole world and stuff. But, getting into real quick, what we're talking about, bad news for the economy, is the job market, right? You see it finally starting to see spikes happen again in initial jobless claims, and the market loved it. It was like, that is fantastic because it was red before this news came out. That immediately dropped yields and pumped stocks back up. But what do you see? It's still in the same range, right? And the question is, are we going to get what happened from September into March of 2023 when you get these big spikes up? That's what the market really wants. That's what the Fed wants. They just won't say it to us. And so, again, that's when the market started doing what? Or really rallying, right? And you can see this pump up. This is the biggest pop we've had since August, as you can see right here from last year, I believe it is. And again, basically it was California, Indiana, New York had the biggest drops and stuff. But one thing I wanted to spell here is this whole thing about the two jobs thing, right? This goes all the way back to the dot-com bubble, 1995 on. And if we draw a line where we're at now, yeah, a lot of people working two jobs, that sucks, or whatever, two or more jobs, that is. But again, here it was right there in 95, people were doing it. Look at where we were at before the 2020 happened. They're right there. And so we're just coming back down to the norm. Like, if people, if you ain't never been on the other side of the tracks, folks, it's rough, right? I grew up on that side of the tracks, and that's what those folks usually do. They're working multiple jobs. That is how it works. And so, of course, as long as the job market keeps putting out these, bad jobs or job numbers, yields are going to continue to see the stabilize or fall. And then, of course, we have inflation next week. So if that comes in line, what do you think is going to happen, right? And so it's going to be, oh yeah, the Fed's definitely going to have to cut now, right? They're going to cut because inflation is going where it wants to go. If inflation numbers come in really bad, well, we'll go the opposite way. So now, before we get into the S&P chart, I want to get your input, because I value you guys' input and thoughts on this, about this video you guys sent me that came out yesterday, I guess it was. And you can see these are these new robots that Tesla's talking about, right? And obviously, it's cool looking, whatever. What you don't see off screen, maybe it's going to show it, is that there's actually somebody off screen doing the motion for them and stuff. So I guess these aren't really, I don't know, it's mainly let me know on the bottom, are these things actually doing the motions all by themselves? But it seems like that off screen, as you'll see here coming up, that there's people doing the movement, and then it's actually then replicating what that person do. You see it right here, what I'm talking about? So I don't know if they're actually doing it, but again, that's going to be the plan, obviously. And, I always laugh when I see these things. Let me know what your input on the bottom, what you think about this, how you think this is going to affect not just us, but for the world. I'm talking about workers, right? And so for me, people cheer this stuff on. I don't cheer it on because, again, we've already seen different versions of this, right? We saw this in Ford and GM, these other plants, Amazon. You're seeing it, right? Where they're rolling out these different, obviously it was these robot hands that were putting the cars together and stuff, instead of having a human being there. And that's why you've seen the employment for numbers for those companies come down dramatically when they started rolling out those kind of deals, right? And so, the other thing is, and don't take my word for it, like, this is Elon Musk, who I consider, I'm not an Elon bro at all. I gave my opinion on him, but I've always said he is a mad genius. The guy's IQ has to be off the freaking charts. I think he was a billionaire once and lost it and became a billionaire twice, but he's obviously a super smart guy. But just listen to, this is him and his warnings about what he is creating and others creating right now.
I don't think we're going to have a choice.
Universal basic income.
Universal basic income, I think it's going to be necessary.
So it means that unemployed people will be paid across the globe.
Yeah.
Because there is no job, machine, robot is taking over.
That's simply and I want to be clear that these are not things that I think that I wish would happen. These are simply things that I think probably will happen.
Mark my words, AI is far more dangerous than nukes. I think the danger of AI is much greater than the danger of nuclear warheads.
So that's the man himself speaking, right? And I'm with him. Like, there's no way you can tell me you put out robo-taxes and all of a sudden you drive taxi cab drivers and limo drivers and truck drivers out of work, And then you're going to sit here in these factories. Oh, forget about that. If you're in factory work, I mean, you're done. Like, you're toast. And a lot of people are starting to see AI with these different apps and these programs. It writes code better than you. It's going to build proof legal documents better than you. All this different stuff, right? And so, it is a fascinating era we are entering. And there's just nobody that will ever be able to convince me. And if maybe Elon can do it, but I don't think he's going to change his tune. They can convince me that this AI, robots, all this stuff, oh, it's going to create all these new jobs. It's like Kathy Wood said, it's like when they invented the tractor. That's the dumbest example. I've said this many times I've ever heard. Do you notice where we were at? We had people in the fields. So, of course, you invent a tractor. What happens? Now, all of a sudden, you're producing so much more, and our population was doing what? It was booming. It was growing big time. What's our population doing now? It ain't doing that no more, right? So you had to build all these factories out, all this stuff, and we were really just starting to come into our own and had a flourishing economy. That is not where we're at right now. And so this right here is just going to take more jobs away. We have seen it, right? We've seen this. We've seen this, movie before we know the ending. And so let me know if you think differently. I mean, I think it's ridiculous when people say it's going to invent more jobs, it takes away. That makes no sense. And that's the man himself telling you. So just want to get your input on that one. Now, when it comes to the S&P, you can see right here what happened. Opened up, gap down, boom. What is that? 5,200. Retested once, retested twice, and away we go during lunch, right? Not only that level, though, you had 5,210 through 5,215 being closed above, right? And why is that important? Because that was a supply zone, right? You've seen it 1, 2, 3, 4, 5, 6 times. Sell down after hitting this level, a very tough level. And so we closed in that level. So if it can continue to push through this, get into that daily fair value gap, which is what that is over to the left, that's actually pretty dang good for the market if you're a bull, right? If you're a bear, you're not very happy about that, right? Again, also we have this trend line over here, which I'll make a couple adjustments on this one. But so far, it's still kind of just hitting that trend line and bouncing off of it. Again, this is the fair value gap I'm talking about right here. And that's what normally happens. It's going to seek it out. Boom. It's should have a reaction off of it to come back down, maybe test the level, and then move back up if we continue to power through this thing. Because I'll get into what was very interesting about this move today. But that trend line right there, again, it's just following it up, right? We keep hitting it, rejecting, hitting it, rejecting down, consolidating, moving back up. That's basically what we're doing right here. So the question is, coming in, I mean, obviously it's Friday, so all those kinds of shenanigans on Friday. But, with CPI coming up next week, are they going to try to push this thing through? Because only 1% exactly away from all-time highs to push it up before CPI or consolidate, right? And then make the big move after, okay? Because we know we see this constantly. So they maybe come down, test right there, move back up, or come back down to 5,200 and bounce, or come back down to the bottom of this channel. I mean, that's really the big thing. But with CPI coming, I think it's Tuesday, PPI, Wednesday, CPI. That's the kind of shenanigans we got to look out and figure out what they're going to be doing. Now, IWM, you can see right here, closed above the 2023 level. Okay, so right now we're sitting at, double top formation it could be. But again, big move up. And no matter what you want to call this, whether you want to call it a buy program, whether you want to call it an ascending channel, whatever, I mean, that's what it's in, right? This is clearly moving up, powerful move up. On IWM, this is what happens when rate cuts get pulled forward. It's what it's all about. That's why it's had all these big moves, because this is the most rate sensitive index out there, IWM, right? And so again, if we keep going up, that trend line is going to be resistance, but also moving up, you're going to have 210 in the cards if we continue to push higher. So as long as PPI and CPI come in range and yields do not start to spike back up and continue to trade sideways or down, this is good for IWM if you're in it. Now, what was really cool about today's move, though, was I told you, track RSP, QQEW. What'd you see? Which one's higher, RSP or the SPY? It's RSP, right? Which means you have more breadth coming into the market, right? QQEW, almost twice as much as QQQ, right? So they're buying the smaller stocks, the ones that don't have as much weight to them, versus the Mag 7, Mag 8, Mag 12, whatever you want to call it. Those didn't even participate until around 2:30, 3 o'clock. Most of them were red, right? And NVDA and Tesla didn't participate at all today. They actually sold off. All right. Now, what was interesting, again, here's what I'm talking about. All you got to do is look and see what's leading, right? To continue to see if this is rates. Home builders, real estate, top 2. Got a couple of defensive ones. Remember, we said, okay, we got to watch this. Utilities, I'm going to talk about in just a second. Consumer staples. All right. You start seeing those getting loaded up on, right? And then healthcare starts to follow. Then you got to be kind of weary, okay? But again, what was, and then also what I'm thinking about, FINX, that's fintech, right? it definitely wants rates to come down. Now, what was the laggers? Again, your MAG 7, 8, 10, 12, whatever you call it, the SOXL, right? XLK. All those were laggers. That's usually been carrying the market up. So it's interesting to see that movement up. But when you look at utilities, I mean, man, this right here, if you didn't know any better and you know those utilities, you would think that was a meme stock or something, right? Or a tech stock. Absolutely just flying right now. What's even crazier about this is when you look at what percentage of stocks are actually above the 200-day moving average. It is 94% above the 200-day moving average. Like, and you can see it don't happen a whole lot, right? I mean, over the last 3 or 4 years, and so and usually when it gets up that high, you start maybe going sideways a little bit, and then you get a big move down, obviously. But yeah, I mean, a lot of money flowing into utility right now. Again, is it because they're building on all these data centers? Is it because they're trying to go defensive? That's what we really got to see, right? That's what we got to pay attention to. Now, HYG, I haven't talked about this in a while, so I'll talk about it. This is your high-risk bonds, right? Your junk bonds. Again, there's no diversion here, right? HYG is going up because you can see from the 16th on, right? It's moving up right here. This is on a daily. What's the SPY doing? It's going up, okay? And so, again, we talked about this. And so as long as you don't have the divergence, which obviously can take a long time, like this right here, what HYG and junk bonds are saying, we're getting out of this. It's too risky, right? Then you don't have to worry about it. Even when you have it, honestly, you know, you can see it. The S&P can go up for months, right? It can be just go parabolic for months. And so just keep that in mind. Now, what is the trend you're seeing? Obviously, still the same trend. Getting punished for forward guidance, right? Roadblocks, terrible forward guidance, boom, 25% drop. Again, what's it in? It's in that phase 1, stage 1, whatever you want to call it. Just a mess. That's what it's in, stage 1. You can't get out of stage 1, right? Like your fintech stocks, and it's just stuck. Right? Airbnb, here's another travel stock. We talked about this yesterday. Is it a trend that all these stocks are going down on forward guidance? That's, you know, softening. Did have ARM go down. It did somewhat recover, still finished red. That's one of your semiconductor stocks. Hood, there's another one, right? Pops 8%, gives it all back and then some. How many times have we seen this? Not only with smaller stocks, with the large stocks too. Rarely are any of them keeping these gains even when they get them, right? Now, Amazon, talked about this one, possibly being a double top right here because it loves to do that. You can see, came red yesterday, popped up, set a new all-time high, but came down and closed right at the same level. So watch this one carefully. Again, if we continue this rally, this is going to go green. There's no ifs, ands, or buts about it. A lot of big money pushing into this one. That trend line, if it continues to go up, will be your resistance, okay? That goes back to November, if I'm not mistaken. Yeah, it was like November, October actually. So it goes back to October from the last rally. That's around like 193, 195, depending on when it hits it, if it continues this move up, okay? And again, it's had a huge move up since 2 earnings ago. Now, when you look at what we got going on tomorrow, there's no earnings to worry about, but you do have the consumer sentiment, which is considered red folder news. And sometimes they listen to this because this is not a lagging indicator like employment and things like that, okay? This is actually, you know, the consumer saying, what do you think? I don't know. Let me know what you think. What's your consumer sentiment? What do you feel going on in the economy? Are things good for you? Or are you looking around going, man, it looks pretty iffy, right? Because you know, and again, the stock market's not the economy. The economy's not the stock market until it is, okay? Again, the worse things get, the more the stock market just continue to push, okay? And then normally, either as I did a members video on this Tuesday, I think it was, people say, oh, don't worry, you don't have to worry about it until they do the first rate cut and then it'll crash. But if you look at that video, you can clearly see there's no rhyme or reason to it. Sometimes they push it down before the rate cut, sometimes it's after the rate cut. That's neither here nor there. But what you do see is it continues to go up as things get worse. As long as nothing happens to the bond market, that's the key. As long as the bond market continues to pump up, and what do we just know? Like for those who are new, what the Fed and Treasury just do, they're backstopping the bond market, right? They're making sure liquidity is stable. That is the key for them. So all they care about, you guys can lose your jobs, lose your houses, lose your cars, whatever. All right, they don't care about that, okay? As long as the bond market is doing its thing, pumpy pump pump, stock buybacks kicking back in, billions upon billions upon billions, right? And so I'll show you that chart this weekend and stuff. And so that's where we're at, right? And it's going to be volatile. There's no ifs, ands, or buts about this. It's going to be really volatile. I think that's the only thing we can all agree on. Right, you know, and so let me know what you think we're going to all-time highs before PPI and CPI next week, or again, we're only 1% away. Are they going to try to sell us back down and keep us sideways until we get that report? Let me know what you think in the bottom. So hopefully you got something out of that. Please hit that like and subscribe button. Really appreciate it. If you want to ask any questions for Saturday's video, last day to do that as well. Again, I take Fridays off But then I'll be back for Saturday and Sunday to set us up for next week, and Saturday to answer all your questions, okay? So I appreciate all you guys. Appreciate all your support. You're the best. I'll see you not tomorrow, Saturday. Have a good one.